Yo, what's going on, guys? Welcome back. Mitchell Waxler here. Super excited for this video because in this video, I'm going to be going over how the banks play you like a game. Now in this video, I'm going to be going over AUDUSD. This is the only pair I'm going to be looking at, but we're going to be breaking down and noting some things on how smart money simply manipulates the market, gets you to second guess and pull out and not stay true to your overall analysis. Okay. Now, if you've watched some of my videos before, you know that I am very, I drill in the higher time frames because smart money trades on the higher time frames. Okay. They want the overall momentum. They don't want to catch these little moves. So they are always noting and they're well aware of what's going on the higher time frames. And they're also well aware of areas where retail traders like to enter, such as, equal bottoms or equal tops, double bottoms, whatever you want to call them. So let's just dive right in. Right now, AU on the weekly time frame, you guys can notice right off the bat, within the last couple of weeks, we came up to a resistance area, right? We have the high over here, and then we have the high right up in over here. Now, if we go to the line chart, you can see it a little bit more clear that we have, honestly, pretty much picture perfect equal highs. Now, what does that mean, guys? We all know there's money sitting above there. We want to go capture that liquidity, and we will. Now, just because liquidity is created doesn't mean it's going to be captured right away. It's set up for a future time. Okay. Now, noting that, I want you guys to also notice that you see after this first week came up into this resistance area. Notice how that second following week, how this wick went above the previous wick and also above the resistance wick over here. Now, why did it do that, guys? For those who have been trading smart money for a while should know the answer. That smart money always does what before they get into a move? They push it in the opposite direction. They manipulate the market. In this instance, everybody, such as retail traders, are selling it when it comes to this area. So what they do, they first bought the market. So they bought it to push it all the way up here to take everyone's stop losses. So they're buying before they sell, and vice versa. When they're looking to buy, they will sell it down before they buy it up. So you guys want to notice little things like this. It might not seem like a lot, but it tells you a lot, right? What is this? What is this little wick going up here before this weekly candle closed down here telling me? Well, it's telling me that smart money was in here. They bought it up to take that money before they can shoot it down. So now noting something like that, I obviously now know that money was taken above this resistance area, but not all money. There is still more money sitting above this area, but the fact that it already captured some money, I'm most likely going to expect the market to retrace a little bit before we see a continuation back up to the upside. So a target that I'm looking for the market to come down to possibly look for another buy opportunity is going to be this candle right in here. This last down candle before the up move. It's not your traditional FU candle or institutional candle. Some people refer it to as a breaker candle or a stopper candle. It's whatever you really want to view it as. I call it a breaker candle as well. I'll highlight it for you. This one right here. But just like an institutional candle, we're going to mark it up the same way. We're going to do the open in the 50% and we're going to drag that out. Now, what makes this candle so significant? Well, as you can see, we're on the weekly time frame. We had this big heavy push up, right? But as this week came around and we had that bearish week, people now are thinking that the market is now going to reverse back down. But so the breaker candle, all it simply was doing was it was getting people to think that the market was reversing here. However, the breaker candle was just a distraction. They pushed it down to get people excited, but then right after that week closed, you can see we had little to no drawdown to the downside after this week, and it just skyrocketed up. Okay, so it confused a lot of people, and those candles can be played off of. So this is an area where I would be expecting AUD to make its way back down to. Okay, so obviously I'm going over how the banks play you as a game, but I'm also giving you guys a weekly outlook on what I'm looking at to pan out, to play out on this pair. So this is an area I would expect the market to come to before we look for it to bounce back up. Now, if it comes through this breaker candle, the next area I would be looking at is this institutional candle right here. We can mark this one up. We can mark this one up as well. You know, you have the open, you have the 50%. This can be a good area for the market to pull back to before we get that continuation up. Not only is it the last down candle before the up move, but also you can see we have some imbalance from this wick to this wick right in here. An area that the market, we would like the market to come back and fill. Is it going to fill it now, later? Who knows? We'll have to wait and see, but let's clean this up. For right now, let's just focus on this breaker candle being our first target. But, you know, more or less, the market's still way up here. So let's dive down into this area. As you can see, 1, 2, 3, 4, 5 weeks, basically, we had some sort of consolidation in this area. So what's going on? What are we going to be looking for? And when are we going to be expecting it to come back down to this breaker candle? And where's that perfect sell opportunity? Well, let's jump down to the daily real quick. Now, I'm going to delete this real quick. So as we come to the daily, guys, it's pretty clear. What you guys see is this wick right in here. Exactly, you know, the exact same wick that we saw on the weekly time frame, just on the daily time frame. So this is that last up candle before the down move. And not only was it the last up candle before the down move, it has that wick taking out all the stop losses that are above these candles. For people that were selling here, selling here, selling here, and so on, you know, all got taken out by this one wick. So this candle right here is the candle that your eyes need to be laser focused on. Okay, and noting that, we're going to mark up the open in the 50% of this very last up candle before the down move. So as we mark that up, you can see most recently, I mean, not most recently, but, you know, a few weeks ago, we had a play off up in here, and then we had another play over here pretty recently as well. All right, so we're going to jump down to the 4-hour time frame, get a little better look of this consolidation area, kind of see a little bit more in depth of what's going on. Now, jumping to a line chart, there's some things that stick out to me, such as relative equal lows. Now, something like this should stick out to you as well, because just like relative equal highs, relative equal lows are the same thing. There is some sort of liquidity sitting under these lows that we will expect for the market to come take out. The reason why I go to the line chart is sometimes it's a little bit easier to, you know, just eliminate the wicks. I know some people have a hard time not looking at the wicks and just looking at the bodies of the candles, because the bodies of the candles is where majority of the volume is at. So when you go to that line chart, it's going to eliminate the wicks, and you're only going to notice and see the overall volume and momentum of the chart, whatever chart you're looking at. So looking back over here, let's ignore all this. Let's ignore all this for a moment, right? Just looking at all this right here. The market came up and it came to this gray box right here, which was that resistance area that we got over from the left. Okay, and you can see that it came in, it played in here multiple times, right? It was egging on people to start selling. So people were selling here, people were selling here, and so on and so forth. And, you know, eventually people got stopped out by this wick right here, and then it tanks, okay? But I want you guys to notice something. And what I want you guys to notice is structure was never broken for the market to now go ahead and reverse in that downwards trend. So if you're always patient enough to wait for structure to break, then that will be that final confirmation that you need to go ahead and take the trade, okay? It doesn't always have to be the best of the best entry in terms of the highest or lowest area, okay? What I mean by that is you don't have to enter right here at the highest point for it to be a good sell or a good buy opportunity, right? That's just not the case. So be patient, wait for structure to break. All right, so let's look at this real quick. Market came up, came into our resistance area, we created a high. Then what happened? We created lows. Then the market came up, created a high, created a higher low. This low did not break the previous low, so we're still considered an uptrend. Now we have this right here, which is a lower high. It's lower than the previous high. However, just because you have a lower high doesn't mean it's in a downtrend. You need both sides of the trend, meaning you need lower lows and lower highs. You can't just have one or the other. You need both. In an uptrend, you need higher highs and higher lows. In a downtrend, you need lower lows and lower highs. So right now, we do have a lower high than the previous high, but we're not going to be looking to enter this until this low right here is broken, right? We waited, it broke, we now have that lower low. So now what does that tell me? That gives me the confirmation that I need to now know that we are shifting the momentum, because I now know we are in a downwards trend because we have created that lower high and that lower low. Not only that, we have played off of that resistance area. We took liquidity to the upside. There's so many things that I can go into to show you that the shift is happening, right? But we didn't enter anywhere over here. There was nowhere clean enough for me to take an entry. But we're waiting. We're being patient. We're being very patient. And as you can see, this gray box right in here, if we go back to that daily, this daily right here, I will draw a line for you guys so you guys can see it a little bit more clear. There's the daily open, and here's the daily 50%. So we know exactly what we're looking at when we jump down to the 4 hour. All right, so we made that lower low, and now we're simply waiting for the market to come back up to this daily area. Now, before it comes to that daily area, before it comes to that institutional candle, you want it to create more areas of liquidity, such as after this low was created, the market came back up and it created what? It created a high, this high right here. Now, that's a good thing to see, because that's just telling you that there's going to be liquidity above this high, okay? And as you can see, what happened? We created these equal lows. Market came up, played right into this daily area perfectly, and then traded away. However, after it traded away, it never came and it never took the liquidity from these equal lows, these relative equal lows. So the fact that it never broke below these lows was telling me that it may want to come back up to this daily institutional area one more time, because this first push, what happened? It simply did not take enough liquidity, meaning there's more liquidity above this high that smart money wants to take before they push the market down. So as you can see, as I scroll over and zoom out, it never broke below these lows, but yet the market came back up to this area. And as you can see, this big up candle is crystal clear that smart money was entering the market right here, because the market only moves with these big candlesticks if smart money is entering. So what they do, they bought the market up one more time before they sold it off. Now, if we go to that line chart so you guys can see, look what happened on the line chart. See, this high came right above these highs right over here. Relative equal highs, looks like an M to me. Broke, they bought it to then sell it. Go back to the candlesticks. This right here was that buy to sell, and as you can see, it has been slowly making its way down. It's the beginning of the week, it's Monday, so as Sunday rolled around and today, it's kind of just been consolidating. But overall, guys, I will be expecting AUDUSD to make its way all the way down to this gray box over here before we see any sort of upwards momentum. Okay, so that's all I have on today's call. Hope you guys got a lot of value. Hope I broke down some things that I know some people had some questions on. But if you have any other questions, guys, just let me know. I have more content coming out soon. But much love to you all. Don't forget to hit the subscribe button, hit that like button, show some love, share the video, and I will see you guys soon.